the capital position now and the confidence you have to deploy that dividend?
Well, indeed, we've had a very strong quarter in which this quarter was much stronger than the second, and we are now in a position to give some guidance for the coming quarters that show that the performance is going to be strong. So it's not only the capital that we have at the end of the quarter, but it's that the near-term outlook, but medium-term outlook for the bank is significantly better than the one that we had at the beginning of the pandemic.
Jose, very good morning to you. There is talk, though, that banks with low capital may still be restricted. We're going to get an update from the ECB on this de facto ban in December. Do you think you're going to be able to actually be able to distribute if they do potentially look at different banks depending on what their capital ratios are?
Well, I think a general ban on dividends is weighing on the sector, and that is very clear. The cost of equity for the banking sector in Europe has been affected by that decision, and I think a general ban on dividends has proven to be negative for the sector. So I think it's also at the same time very difficult to differentiate amongst banks because you can put an undesired, let's say, negative perception on some institutions. So what we believe is going to happen is that they will allow for a small but a general dividend payment for the sector as a whole.
Jose, it's interesting you say that the biggest thing weighing on the sector right now is what's happening with the dividend, when most people would say, look at what's happening to the economy at the moment. We face potentially a second lockdown. Rates could be low in Europe and elsewhere for a long, long time, Jose. And I'm just trying to work out, how do you guys start making real money again anytime soon with the prospect of rates staying where they are for the next 5 years?
Well, we've given a guidance for our profits for the year of around 5 billion, recurring profits of around 5 billion. That's a return on tangible equity of 7%. So in the worst crisis in decades, or almost in a century, thanks to our diversification, thanks to the very good performance of our units in the U.S. and in South America, this year we are going to be able to have a profit of 5 billion. Recurring profit of 5 billion. So I think this shows the strength of the bank, its diversification, and that the fact that the bank, even in this very bad situation, is able to serve its clients and make money. So we really don't see, with this level of capital, it is difficult to justify that European banks trade at 0.4 to 0.5 times book. And I think that's not good for the banking sector in Europe.
Jose, of course, the top story today is the resurgence of cases around Europe, people taking to the streets against these lockdown measures in Italy. Are you worried that there's going to be more risk to bad loans? Can those take another leg lower, given the resurgence of the coronavirus and the restrictions we're seeing in Spain, Italy, France, the UK, and so on?
Well, clearly there is still a high degree of uncertainty on how the pandemic will evolve. However, as every day passes, we have more visibility on the impact on our customers. At the end of March, we gave a cost of risk indication for the year of around 1.4 to 1.5%. We now think it's going to be in the region of 1.3%. And although, again, it's really difficult to predict what will happen, the reality is that, for instance, the moratoria is behaving significantly better also than we expected. Two-thirds of the moratoria have expired, and only 2% are impaired. We have seen significantly better behavior of the economy in Brazil, where GDP growth, the IMF has improved its outlook from -9% for the year to -6%, and local analysts are looking at -3 to -4%. Better outlook in Mexico, better outlook in the U.S., better outlook in Poland. So yes, there are a few countries in Europe where this might be more difficult, but when you look at a diversified group of banks and units that we have, the outlook is definitely not as bad.
Jose, just quickly, there's some news out in Spain this morning that you're looking to cut 3,000 jobs in the country. Any comment on that this morning?
Well, the customer behaviors are changing. When you look at the UK, for instance, in the quarter, 80% of all transactions or of all sales were conducted digitally, and for the group as a whole, 44% of all sales were digital. So we need to clearly accompany our customers in the way they want to establish their relationship with the bank, and we need to adjust the physical distribution network. That, however, as you may imagine, any adjustment to our personnel has to be negotiated with the unions, which we haven't yet. So that figure that you are talking about is highly speculative at this moment. But clearly, we will sit down with the unions over the next few days and start discussing the adjustments.
The figure's speculative, but quite clearly the effort is not. It looks like you're going down that road, Jose.
Well, again, as I said, we need to adjust the physical distribution network basically to respond to our customer needs.